Coca Cola is one of the most iconic consumer brands in the world. For more than a century, it has dominated the global beverage market. But the real question for investors today is this: is KO stock fairly valued, or is the market already pricing in all of its strengths? The story of Coca-Cola began in 1886, when Dr. John Pemberton introduced his syrup at Jacob's Pharmacy in Atlanta, Georgia. That very first glass marked the birth of what would become the world's most recognized beverage brand. In its first year, Coca-Cola sold only about 9 drinks per day, but the refreshing taste quickly captured public attention. By 1892, Asa Griggs Candler had formally established the Coca-Cola Company, setting the stage for global expansion. Over the decades, Coca-Cola transformed from a local soda fountain drink into a worldwide symbol of refreshment, innovation, and brand loyalty. From its humble beginnings in Atlanta, Coca-Cola has grown into a truly global powerhouse. Today, the company operates in more than 200 countries and serves nearly 2 billion beverage servings every single day. With a portfolio that spans soft drinks, bottled water, sports beverages, and teas, Coca-Cola has built unmatched distribution networks and brand recognition. In fact, about 70% of its sales volume and 80% of its profits come from outside the United States, proving its dominance far beyond its home market. This global reach, combined with strong marketing and product diversification, has made Coca-Cola not just a beverage company, but a symbol of refreshment worldwide. Coca-Cola's revenue is driven by a diverse portfolio of beverages that go far beyond its flagship soda. Carbonated soft drinks remain the largest contributor, accounting for nearly half of total sales. But the company has strategically expanded into bottled water, sports drinks, juices, teas, and energy beverages to capture changing consumer preferences. Brands like Dasani, Powerade, Minute Maid, and Honest Tea strengthen Coca-Cola's reach across multiple categories. In addition, Coca-Cola generates significant income through its global bottling and distribution system, which ensures its products are available in more than 200 countries. This combination of iconic sodas and diversified beverage lines makes Coca-Cola's revenue streams both resilient and globally dominant. Now we are looking at a small portion of Coca-Cola's financial ratios for fiscal year 2025 and fiscal year 2024. For fiscal year 2025, Coca-Cola reported a gross margin of 61.63%. This means that for every dollar of revenue, the company retained about 62 cents after covering the direct cost of goods sold. A strong gross margin like this reflects Coca-Cola's pricing power and efficiency in production and distribution. When we compare this to fiscal year 2024, where the gross margin stood at 61.06%, we see a slight improvement. Although the increase may look modest, even a fraction of a percent is significant for a company of Coca-Cola's scale, as it translates into billions of dollars in additional retained value. In short, the stability and slight upward trend in gross margin demonstrate Coca-Cola's ability to maintain profitability despite global cost pressures, reinforcing its dominance in the beverage industry. For fiscal year 2025, Coca-Cola achieved a return on invested capital of 18.8%. This means that for every dollar of capital invested in the business, the company generated nearly 19 cents in operating profit. A strong ROIC like this indicates that Coca-Cola is creating value well above its cost of capital, reinforcing its efficiency in turning investments into returns. In fiscal year 2024, ROIC stood at 16.27%, which was already healthy but slightly lower. The improvement in 2025 shows that Coca-Cola managed to enhance profitability relative to the capital employed, either through stronger operating earnings or more efficient capital allocation. Overall, The upward trend in ROIC highlights Coca Cola's ability to sustain competitive advantages and deliver shareholder value across consecutive fiscal years. For fiscal year 2025, Coca Cola reported a free cash flow margin of 26.07%. This means that after covering operating expenses and capital expenditures, the company was able to convert more than a quarter of its revenue into free cash flow. A strong FCF margin like this reflects Coca Cola's ability to generate cash that can be used for dividends, share buybacks, or reinvestment in growth. In fiscal year 2024, the free cash flow margin stood at 23.33%, slightly lower than the current year. The improvement in 2025 indicates stronger cash generation efficiency, either from higher operating profits or more disciplined capital spending. Overall, the upward trend in FCF margin highlights Coca Cola's resilience in maintaining robust cash flows, which is critical for sustaining shareholder returns and funding long-term strategies. For fiscal year 2025, Coca Cola reported an interest coverage ratio of 8.3 times. This means the company's operating profit was more than 8 times greater than its interest expense, showing a very strong ability to meet debt obligations. In fiscal year 2024, the interest coverage ratio was slightly higher at 8.5 times. While the difference is small, it reflects minor changes in operating earnings or interest costs. Importantly, both figures are well above the threshold of 3 to 4 times that analysts typically consider safe. Overall, Coca Cola's interest coverage in both years demonstrates a highly secure financial position, reinforcing its reputation as a defensive stock with low credit risk. Now we are looking at Coca Cola's financial performance across fiscal years 2025 and 2024. The company has shown steady improvement in profitability, efficiency, and cash generation, while maintaining a very secure debt position. These results highlight Coca Cola's resilience in navigating global cost pressures and its ability to consistently deliver value to shareholders. Beyond the numbers, several positive catalysts continue to support Coca Cola's stock outlook. The company benefits from unmatched global distribution and brand loyalty, operating in more than 200 countries and serving nearly 2 billion drinks daily. Leadership transition under Enrique Braun brings renewed focus on digital transformation and marketing campaigns, including collaborations with global icons like Lionel Messi. Coca-Cola is also adapting to health and wellness trends by expanding into bottled water, teas, and low-sugar beverages, ensuring relevance in a changing consumer landscape. Together, the combination of strong financial performance and strategic catalysts reinforces Coca-Cola's position as a defensive stock with resilient profitability, robust cash flows, and long-term growth potential. Despite its strong global presence, Coca-Cola faces several headwinds that could weigh on its stock performance. The company is currently entangled in a multi-billion-dollar tax dispute with the U.S. government, creating uncertainty around future earnings and cash flows. At the same time, the ongoing leadership transition introduces short-term risks, as investors often wait to see whether new strategies can be executed effectively. Another challenge comes from shifting consumer behavior, particularly the rise of GLP-1 weight loss drugs such as Ozempic and Wegovy, which analysts warn may reduce demand for sugary beverages. Coca-Cola's fair value is estimated at around $118.40, while the latest closing price of $75.90 suggests the stock remains undervalued. Recent weakness in North American sales has triggered a short-term correction, but as a defensive company with steady growth characteristics, such pullbacks often create opportunities for long-term investors. And while consensus fair value remains modest, my independent valuation highlights Coca-Cola's long-term strength, with the latest closing price providing the real-time context investors need. This perspective challenges the market consensus and underscores the importance of looking beyond short-term sentiment when evaluating a global brand like Coca Cola. If you found this analysis valuable, don't forget to hit the like button and subscribe. Share your thoughts in the comments. Thank you for watching. I appreciate your time and support.